Good morning. Welcome to Options Tender. It is Friday. Happy Friday, everybody. Happy holidays. We do have a short trading week next week. Monday is Christmas, so we won't have any trading on Monday. Also, the week after, we have New Year's, so we'll have a day off there as well. So today, we're going to go through SPY. We'll check out the VIX. We're going to focus on traditional technical analysis, going down to the multiple time frames, and then we'll match it up with, we'll compare it to the market structure. In today's video, I want to emphasize the alternate bullish count, and by bullish, I just mean price makes it above all-time highs, and then it has our crash scenario. So anyway, I'll just jump into it. Let's go. If you're new here, go down to that bottom right hand corner, hit that Options Tender logo, and subscribe. I want to emphasize, first of all, I'm grateful for everybody that's been supporting the channel. We've accelerated on views and subscribers, and I really hope this content helps. I try to jump around and give you a full picture from different angles of how I look at things. So if you press that like button, that's the best thing you could do for this channel. Keep it growing. I really appreciate you. So we have SPY on the monthly time frame. I boxed in these zones here so you can see that's kind of our breakout zone. Price action was down here for about 14 months, I believe, and we broke out of it, back tested, and had a huge, massive move to the upside. And we broke out of these zones as well. So those zones made the support and resistance. So it's a very important breakout area if we're looking at this month specifically. So there's nothing really bearish about this situation alone. On the monthly time frame, we are into supply. So that's one thing that we have to look at. We're into that supply zone, which again, these, I could draw another line up here and show the same thing. Like we got into supply here. And so there's another breakout. So yeah, there's potential for this thing to break out above this supply zone as well. So we'll be monitoring that. There's no reversal signals, anything on the monthly time frame. And I'm not looking at indicators specifically. I'm just looking at structure and the candles, supply, demand, things like that. So that's what we have on the monthly time frame. So really, we're still in a breakout. There's nothing wrong with this chart. On the weekly time frame, this gives you just another perspective of what's happening. We have our resistance here. We're into that supply zone. You can call this a whole zone here. You clearly see what happened with this resistance area. Got above it and couldn't hold, and so fell back down. This weekly candle's right in the middle of it, and this could end up. We're going to see how this candle ends up today, but it could end up looking like a topping type candle. We're not, in my opinion, we're not breaking out of this yet. This is not a clean breakout. We're above, but we need to hold above there. Okay, next week could be clarification of that. Now, when you look at these zones, if I box this in, you notice that with volatility, you go from one end to the zone to the other. It's really common to go from one into the other. You saw we broke out of this zone and went straight up to the next. Okay, so this is very possible. How important, on that monthly view we're looking at, how important, I have to go back to it because I want to emphasize this breakout. This breakout zone is going to be so important on what happens next. So let's call it 455. Let's call it a 455 zone. So we had our breakout, held on to that 455, made it up to the next resistance. And now if this fails, we have all these divergences. We showed in the past, several videos, all of the divergences that we have on all of the indicators. I'm not going to go through all those right now. I don't want to waste your time. I want to be very direct on this. So if we fail underneath this 470 area, we should see somewhere back to this 455 zone. That's going to be very important to show what happens next. And I'll show you on the market structure on what we're looking at. So all of these pivots could be handled, but really this breakout, and you could say 458 as well. This is a zone. So really this starts to break, and we'll be looking at lower levels of retracement. And then we'll talk about what happens next. So let's go down to the daily time frame. Trying to get through these pretty swift. I don't want this to be too long. So you see I boxed in those zones again, and we're kind of getting a reversal candle. We did not make a new high here. It's possible, everybody talks about the new all-time highs up here at 408 area. Or 480 area. Not really scoping out whether that's going to happen now or later. That doesn't really matter to me. The setup is there for reversal now, and also our alternate scenario, which I'm going to show you next, for the market to go higher. But either way, I'm looking for a pullback. This whole thing has to correct sometime. Okay? If it's not the end, it needs to correct in some form or fashion and then head higher, or just head straight down from here. So the bottom of this zone, we have this resistance around 460. And then you see the real kind of breakout area from this daily supply and demand is that 458 that we talk about. That we're talking about 455 zone. So this is a real important area right here for price action to hold on to if we're going to have a shallow retracement and then head higher. If we're going to have a deep retracement, we got to get under this zone. We'll start testing. I think if we get under this zone here, we're really going to start testing the bottom of this potential trend line here. Okay, so that puts that into play if that's the case. All right, now let's go ahead and just look at this from a Elliott wave perspective. We have our top. This says our top is in. That this top was good, and that we're having another top here. That's our primary scenario. But I want to focus on our secondary scenario. And I've had this up here for quite some time. We talked about the bull scenario while we were in this correction. So this hasn't changed. We really emphasized our bullish scenario. Not that I made money off of this. I'm not saying I always make money. I made money. I didn't. I started getting bearish on some of these highs here, especially this high here. Okay, so our alternate scenario is playing out. We said that this was an expanding diagonal. Okay, the only thing I had to change was the projections. I thought we would have got a pullback first, not just a straight up shot here. And so what we're going to focus on now is you see the lines from this crosshairs. This is on this board here without all the other drawings everywhere. You could easily tell. You see a lot of tops forming right here. Okay, going horizontally all the way across back to 2022. If we break down from that, that's a lot of people are going to consider that a fake break. And so price should continue lower. Should be a deep retracement before heading higher. But if this previous high holds, then we should get our correction. It's going to be a B wave. And this is assuming that we get all-time highs and much higher. Our B wave could be a triangle. So while we're in the seasonally bullish time zone, maybe we come back to test the highs around that 455 area, 458, and make some sort of flat or triangle, waste a bunch of time before heading higher. Very similar to something like this. It took a few weeks in this position, a few weeks before gaining some market structure, clawing its way up and then shooting higher. I think that's very plausible. I think that can happen. So we really have to look at this zone here. But it will take some time. It'll take 2-3 weeks going into January before heading higher, if that's the case. But if we see that break, now we're looking for a sharp pullback. And I still like this sharp pullback scenario more because of all the divergences that we have. But that divergences on all these indicators, they have to be worked off. So it's either going to be in time or it's going to be in price. Okay, so those are the two scenarios. Now I'm just going to show you exactly what we're looking at. In this bullish scenario, we have wave 3 up here. I'll tighten this up a bit. Okay, now we have wave 4 in. And we're looking for an expanding ending diagonal where all of these waves are going to be 3 waves. But they're all going to be motive waves, 5 of them, and they're going to expand as we go. Okay, so we have our ABC for 1, ABC for 2. Now 3 has to be larger, ABC for 3, which it is, and 4 has to be larger than 2, ABC for 4. Now we're starting to expand, okay? This megaphone or rising wedge. And now we're getting much larger in wave 5, where we're getting a zigzag. Most of these are going to be zigzags. This extreme 5-wave move push for an A. We're going to look for a B correction, whether it's shallow or deep. And then for that last blow-off move to the upside. Now we have a few numbers going on here, and I'll explain what those are. So in order for this to be a valid expanded diagonal, not only do you have to have the 3-wave moves, but this 100%, that's wave 3. So wave 5 has to be longer than that 100% move that representing wave 3. So we take the measuring move of wave 3 and place it on the bottom of 4, and wave 5 should exceed that 100% move. And likely it's not just going to hit the 100% and move down. So we're going to probably keep going. Okay, so we have another target higher at the 127.2 of this move. So that's a possible target at 508. We also have, first of all, this wave A. So we have this, now we have a retracement tool. You see the top of wave 3. We add on the retracement to wave 4. So this is the length of 3 to 4. And now the extension of that 3 to 4, we already hit the first target at 127.2. We're at that target. So the second target would be the 162. I'm not sure that we get that in this first move, being the A. So we were in nice resistance. Now we should see that correction going into next week. And so that's one of the extensions there that we see going on. All right. So now we're going to have to do something else. And we're going to take the length of A, and in typical symmetry, whenever we see B, the bottom of B, whether it's shallow or it's deep, we're going to extend, we're going to take this whole length of A which we already did on this, for example, this right here, is the length of this first A, 5-wave move. So wherever we get this B, the end of B, I'm going to attach this equal length where A will equal C. So if it's down here, it's going to be this length, and we're going to see just over the 100%. If it's a shallow move, that means the market's stronger, and we should see a nice big move past 500. Okay, those are just some measured moves. The price does not have to hit exact on those, but that's some of the symmetry that markets do. And you can see, for example, this A is larger than the C, so it's not always perfect. And then this A is much smaller than the C here. You see the length of C here. So it's not perfect how this works, but this is an expanded diagonal. So we could pull this up here, and we could probably expect the price to hit the top of the megaphone here, somewhere in that zone. Okay, so this will be a kind of a blow off top scenario. We get all-time highs, everybody's super geeked and happy, but we need to see a correction first. We need to see what kind of correction this is going to be, shallow or deep, and super important. Then we can kind of project where it happens from there. There's a couple other tools we can use, and we'll do those in future videos. And speaking of, don't forget to hit that notification bell so you can get the notifications from when we make these videos. Try to make them often, because we're reading the market every single day. The market's giving us some information, and we're trying to piece that information there together in order to see what kind of results we get. Okay, so this is the alternate situation where we make new all-time highs, and a really, really important part. And I say, why can we do this? Why do you think we still can handle this? Well, this all has to happen in between, so far, January and March. That's kind of our time frame, and we're looking at the FOMC. We're talking about, really, in March, the Fed making a pivot, and that means cutting rates. We're at a 75%. This continues to go higher. The market is seeing something that we're not seeing it in all of the fundamental information that's coming out. We don't see this yet, but the market's seeing something that we need to cut rates, that the Fed is going to cut rates in March, not so much in January. So the market doesn't have to stay going up. It can turn down before the Fed pivots, but usually the pivot is right around that area. That's when the market turns for its recession and turns for its move to the downside. So we have some time where the market could still continue higher, but it doesn't have to. Okay, it can catch everybody off guard, and it could start going lower. Then the Fed pivots. Maybe we'll get a bounce and then continue lower. So there's different scenarios that's happened different ways in history, but this certainly plays out just fine with this scenario. We're looking at March, so these projections are way out into May. So that but that's neither here nor there. This is just our alternate scenario. We need to see what kind of pullback we get, and then if we start going higher, we need to ride that wave higher. All right. If we start breaking down fast and hard to the downside, that's going to, I think that, that could really start pulling the bears in, and then maybe we start getting all-time highs. We haven't enough fuel at that time. But everything says we're going to get a reversal pretty soon here, and it could be worked off sideways or deep. And in both scenarios, whether you're bull or bear, this would be good for either one. And by good, I just mean that, you could buy the dip, both bulls and bears should see should somehow play this to the downside and look for at least a bounce. Okay, don't want to confuse you, but this is the bullish scenario. If all you bulls out there want all-time highs plus more, that's fine. It's fine. We're traders. That's what we want to look for. So that's pretty much all I got. Let's check out the VIX and see what the VIX would look like in both of these scenarios. Let's see here. All right, so the VIX, it did break out of a wedge. We had this falling wedge. We got to the 12 complacency area. We're breaking out of the wedge. I know it's not drawn here, but there's a wedge where we broke out, and we could simply be back testing that where the market might go a little higher, drifting up into next week, and then start the move. Or it could just be tightening up here and then just head higher from this point. Either scenario will work out fine, but just know that we already have our breakout. Could draw a little line there. Either way, we got our breakout. And now what we have to think about is whether this is just a back test of this area. We stay within the channel. Maybe we come back up to the 19 area. So the market would correct at that point. If the market corrects shallow, maybe we only make it to the 15 and start heading lower. We get a sharp pullback in the market. Maybe we go to tested channel, pull back. And if we break out from the channel, I think that's a tell sign that our primary bearish scenario is in play. But until then, we have no confirmation. So shallow retracement for the market, deep retracement for the market with the VIX, reject off of here. That means the market's bouncing. And then we'll kind of see a critical point. We'll see a critical point whether we continue in our alternate scenario and make all-time highs, or we hold a higher low and we start breaking out from the channel, and we know that the bear scenario, the primary scenario, is in play. Okay. That's all I'm going to put out there, this information. There's a lot going on. So, let me put on the 65 so we can see this is a good zone here, the 13. You see we're pulling back right now. So the market's kind of not doing much, but maybe we're just back testing this wedge. We rejected off the gap. Maybe we're just pulling back to the 13 to get a higher low, and then we start moving up. We have some market structure here, so this could be a 1-2, 1-2, 1-2, 1-2. This could be pretty devastating if the market gets a catalyst and really wants to rip to the upside. It has the potential. Or this can be just a very simple 1-2, and now we're getting another 1-2. Setting up a little different structure. Okay, so it can go either way. So don't be surprised if we do get some sort of catalyst and start heading up there. You can have a lot of 4s and 5s and 4s and 5s towards the top here. So let this, don't think this is just one move and it goes 3, 4, 5 and it's done. Just know that there could be a lot of 4-5s. It could mimic this towards the top area. Okay, that's all. Thanks for joining us here at Option Center. Have a wonderful day. We'll talk to you tomorrow.